Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey, what's up everybody? Happy Tuesday night. Sorry I'm getting off a little late, or later than I wanted to be, but either way, we'll get started. Just trying to get dinner and everything done. You know how it is. I just updated the dashboard, so I'm looking at seeing what moved today. Doesn't look like anything too much. Canopy bounced around, but that's always bouncing around. Alcoa is up 6.9%. That seems like high. Had a recent pullback. Actually, I haven't looked at them in a while. I'll have to pull them up at some point. Yeah, other than that, I think it was overall a pretty green day from what it looks like. Home builders are down. Is lumber down? No, lumber's back up. So I don't know. I don't really know. I haven't really thought too much, but it's only down because it's at the peak here. It's actually almost oversold. This is a 3-year chart. Yeah, 3-year weekly. Which actually looks really good. This is November. It's went from... They think this is just an ETF for home builders, but obviously... how close is that to lumber? How close does that follow lumber? Not close. Well, maybe it benefits because it's so much cheaper. But I mean, home builders. There's a lot that goes into home building, the markets, the housing markets, everything. So it might not correlate that closely. Just so I try and sometimes just look between different charts and just see if I find correlations. If not, whatever, it's not a big deal. If I do find a correlation, obviously that doesn't mean that anything really more than that. But it's just something to keep in mind that every once in a while you find something that tracks something perfectly. Which if you've ever tuned into the stream, I'm sure you've seen that can happen. Sylvain's up a little bit. What's all down? Just all the home builders are kind of down, but nothing crazy. I saw Bitcoin actually dropped under 40, which was kind of surprising. I'm still surprised by that. I don't know if everything's just kind of moving around into the different parts of Bitcoin. I think I touched on this quickly last time, but it just seems... It's kind of surprising that it would, just peak here and hasn't really done anything more. I don't really follow it that close, so I don't know. I don't even know what the news is on it. I don't know if there is news on it, but and I guess people follow technicals, and obviously if there's news, the news is probably the big thing with that. But I actually am caught up today, which is a miracle. So I just have to update this real quick, but I got through all the stocks from the weekend. So these are the daily movers actually from Monday, because I don't do it every day. I do it Monday, Wednesday, Friday, and then the insider buys though, that'll be from today. So we'll go through that. I'll update the losers as well. See if there's anything popping up. I'm assuming most of you guys probably don't follow, but both Johnny and I did move back into BNED. Well, I moved back into BNED. I have a wash sale now with BNED. But Courage put out his article, and I have been going back and forth on kind of what I thought. I've been reading so many articles on it, and to me, it still just seems overblown to me. So I'm still very bullish on it now. I retook my position with the wash sale, just to be totally transparent. I've been buying shares, but I think my break-even point's like $1.04, so it's still technically a loss, and I'm basically going to set my stop loss from that point down 10%. So, but I really think that one's going to bounce back for a few different reasons, which we can go into it a little bit. There was some good articles actually I saw. I had a Flex Shopper up because that's actually the only ticker I didn't get to. But if we go into here, just the BNED real quick, just so I can pull up Seeking. Oh, hold on, I gotta hit. Not that. This. Either way, we can just go here. Someone posted what I thought was pretty interesting. So Courage, this is his second article, and if you go down to the comments here, if you haven't read this, highly recommend it. It's I think it presents it's a really well worded way, and he also brings in both fanatics and lids and how them being involved. Like they wouldn't be involved if they didn't think there was something here, and it's to their benefit if BNED succeeds is really what he's saying. So the chance of them letting it go is and you can tell it's a long article. It's very well written. So if you are following it, it's great. But yeah, BLCM posted this. So this is an addendum actually for the initial contract that was put forward. And normally if you scroll down here, this is basically the legislation that was presented to the Department of Education, and this is it's to change this part of the law, this 6.8 here. Let me get rid of this, and then I don't know if I can zoom in. Yes, I can. Hopefully you can see that a little better. Anyways, so what this is basically saying is they want to make it where prior to the growth of these affordable access programs, course materials purchasing was by and large effectively opt-in, putting the responsibility on students to find and purchase their own materials at retail prices increasing at a rate of 6% a year according to the Bureau of Labor Statistics. The emergence of opt-out affordable access programs gave institutions the bulk processing power to drive down costs and ensure course materials access for many students who might not otherwise be able to obtain it. So anyways, the wording of this, though, is what was going to change. Now, what's in red here was what they were saying basically just to kind of get rid of. But now this is like an addended one, and this is basically saying you could present it in this way, which would still benefit students because it will provide a way for students to obtain those books and supplies by the first day of the payment period, but no later than the 7th day of that payment period. And instead discloses to the student the cost of the fee or the prorated amount of books and supplies are included in tuition, and has a prominent user-friendly web-based opt-out capability that is available to the students throughout the institution's course ad drop period. So because the issue here, if you guys are just tuning in for the first time and you haven't really seen much, is that you'd have to opt in as opposed to just opt out. And what's his name here was saying that he thinks FTC participation rates fall to the 30s when an opt-out model is used versus 82% participation in an opt-out model. I'm not sure exactly where he got those numbers. I don't know if they had listed that somewhere before. I should probably see if I can find out where it said that. But I feel like what this is saying is, and kind of to what his overall point is of this article, is that first off, they need to refinance at some point. But what was I saying? Sorry, I'm drawing a blank here. But Let me just see if I can scroll through to the part that I was thinking of. So, and there's the relationship with fanatics. I already brought that up. This is extremely well written. Nice job, Courage. Actually, I didn't read through all these core value propositions. I should probably read through this section to see, because he's already touching on that fragmented 30 to 35, and therefore as a linchpin to the program. But what he was saying is that if everyone has to opt in, even though I'm sorry, I can't find that section I was looking for. It's such a long article. And now I'm thinking about it. It might have been something else that I was reading that I got that point. I mean, here he's just talking about, how much it sold off. Either way, I'll figure it out at some point, and I'll post it. It might have been one of the other articles I was reading, but I mean, you got to think about it. People are going to opt in just for the convenience of this program, or at least I think they would. Like I said last time, if I was in college and you could tell me on my first day everything's automatically guaranteed, and if they allow the option to purchase from used to digital to renting, whether it's digital or physical, I think if you have all those options and you go in and like, hey, we can just wrap this into your tuition, I think out of convenience most people would take that, especially if you're transparent about the pricing and how much it's going to cost, and if you just posted, because when they're buying this in bulk, they're already able to give a discount. And one of the points into this article was that if you don't do it this way, what ends up actually happening is it ends up costing more to the students because they're buying it individually, and the schools or whoever's off selling the textbooks can actually increase the price of things. Maybe this is actually what I had read. It said so they created these affordable programs, which basically is, it allows the university to purchase in bulk, because otherwise course materials purchasing was by and large effectively opt-in, putting the responsibility on students to find and purchase their own materials at retail prices, increasing at a rate of 6% a year according to the Bureau of Labor Statistics. The emergence of opt-out affordable access programs gave institutions the bulk purchasing power to drive down costs and ensure course materials access for many students who might not otherwise obtain it, and required course materials. Their programs over their lifetime have saved students billions of dollars, ensured students have access to the course materials at the start of the term. We are concerned with the proposition regulations' unintended consequences that will reverse the significant progress institutions have made in leveraging their buying power to significantly lower costs for students and improve their timely access to the required materials that they need to be successvel. It was during, I guess, the Obama administration that these laws got put in, which is kind of ironic because you would think in a Democratic party, now that it's another Democratic party, that you wouldn't want to back out of this. Like, this is a net win for both the students, and it guarantees, that they're able to have successful bookstores, which benefits both the college and obviously BNED. So that's what I was trying to find. Sorry that took me so long to find that. I don't remember if Courage had. I don't know why I'm scrolling like this. It's ridiculous. There needs to be like a drop to the comment section button. I don't know if there is. I know when you first click on the article, you can pull it up that way. And everybody who's against it still is just saying that obviously if the Department of Education puts through, they don't think that they'll be successful enough. Actually, I wonder. I don't think I saw. 90 to 10% for organ donations in various countries that have the two different policies. BNED was a pretty horrible company head for BK. Other than this call option on the FTC, not sure a sub 100 whose very existence depend on making sure this doesn't happen gets much of a seat at the table when this gets decided. I defer to the offer. That's probably a good bet here, but I'll be on the sidelines. And I understand that what Beach Trader's saying. It's too risky for him, and for most of you, it's probably going to be too risky. It's but this is how you get outsized returns. You have to look at these distressed companies that look ugly, and you have to find the very few, and there's very few that I think have a turnaround story. And this one is just good enough that I just can't deny this one. So, Johnny and I had been spitting ideas back and forth, and we're constantly sending like, well, what if this? And, and I feel like we both keep coming to the same conclusion that like, I think they're going to make it out of this. Obviously, big catalysts would be, I've already talked about it, interest rate changes. If during the next quarter, if they really remain profitable, I think that would allow them to restructure. Any kind of news about restructuring, I think that would be extremely bullish for the stock. I don't know if you looked at a lot of these distressed kind of companies, but that's typically how it seems to work. Yeah, that's the big concern right here. And everyone kind of knows that if it does all of a sudden get through restructuring, then the next big date would be in November when we're looking for the Department of Education's decision. But there's already been, they've already tried, they've gone back and forth with this, and it always seems to be the most cost-effective way. And BNED's just providing this to a bunch of schools that didn't have it, and they already have the structure all set up. So it just seems like it's a path of growth that will continue on. And I think I don't want to put any faith in Department of Education in terms of them making what I would consider an intelligent policy, but I don't know. I mean, someone's got to be able to do the simple math for them and just show them, like, look, this is what people are buying. This is like the average cost of these things. This is what the students are paying, and and if everybody's happy with it, why not just, as long as it's extremely transparent that they can opt out, I don't feel like we need to change the laws. Like, but, and maybe I'm wrong. And like I said, that's why I already hopped in this once. I got stopped out, which is fine. It's part of the way my strategy works. I take huge positions on very risky companies, so I have to have stop losses. There's nothing I can do, because otherwise there's no way to invest like this. Because if I split it amongst a bunch of companies, then I could probably hedge the risk and I could let things go down further. But I just can't see positions just getting eaten alive like that in case I'm wrong. Which I've been wrong before. It's just lately I've been on a hot streak, so I'm gonna keep going with that. But I don't know where this popped up. Was this the other part there? Where did this little page come up here? Sorry, I don't know if you guys can even see this. I hate how everything is so zoomed in. Oh, this is just the partnership with this is from the 10K. If you're reading into the 10K, it goes into like lids and Fanatics and the deals that they have with them, and it basically, they jointly made a $15 million strategic equity investment in BNED. So that's why Courage was bringing up that like a lot of people aren't talking about this, but there's like big incentive for them to stick in with BNED. So once again, just I like the stock, but we'll continue on. We'll go back to the dash because I gotta go through today. Well, yesterday's daily movers and today's insiders. Hopefully we can find some stuff. If not, I haven't been through my on deck list or my watch list in a minute. And those things, I put them on those to kind of keep a check. Usually if you're on my watch list, I already like it. I like it for some reason. I'm looking for the turnaround, or there's already kind of an interesting story, but usually it's too expensive for me. My margin of safety is kind of a key factor in my decisions. I will buy something if I can reasonably predict that there is future cash flows coming in that aren't in the numbers historically, or if something's just gotten like really distressed and I think they're going to start to pay debt down or whatever, kind of like the story with Rig. Which is an example of how these things turn around. But you kind of have to go into these smaller companies. I know it's like some people are like, I looked at the balance sheet and it looks terrible. Okay, that's it? That's all you did? That was all your research? Like, I don't know. That seems lazy to me. And maybe that saves them from, and maybe some people don't want to go into that much detail. But I do this as a side passion, hobby / job, whatever you want to call it. And if you're going to be doing this, you can't not delve into these things, with your free time as much as possible. If you do and you're able to be successful, good for you. But I mean, even like day traders spend their entire day like just watching, paying attention, and I'm assuming outside of it, continuing to read up on technical analysis and learning all the cycles and trying to overlap a bunch of different ideas to become really, concentrated in terms of like, knowing when they really think something looks bullish because you got like 10 indicators pointing that way. But we'll start to go through these. Like I said, these are from Monday. Rum is moving up. It's Rumble. They need some revenues. It's too. No matter, is there news there? And this is the thing too. When I'm looking at these companies, typically I'm looking close to 52-week lows, because usually that's when, if I'm going to make a move anyways, it's kind of has to be closer to that. Either that, or possibly it's lower, but it has like a 52-week high that was way above that, and then that way you can kind of just on that you can find things that are relatively cheap. And I know that's just price, which is just one part, and that's why you can use the other multiples to kind of figure out if it's worth looking at. But it looks like they announced public launch of Rumble Studio. So it's a high growth video platform. Have I looked at Rumble before? Or I have. It's been a while. We'll pull it up. It may be interesting. And see, that's the other thing too. Hold on, I gotta shut this off so it doesn't keep trying to load the data every time I click these, because otherwise it'll take forever. And narrative, it's all important. You gotta, someone able to predict that this is going to generate a lot of extra revenue, maybe. And if it does, then I'm interested. But other than that, it doesn't have anything multiple wise, and it's not trending really cheap right now anyways. I mean, it's up 33%, so it was close to a 52-week low. But that's why sometimes just the news can cause something to pop. Lease Cycle Holding. It's Canada-based global lithium-ion battery resource recovery company. There's so many of these little battery companies. When I first earlier in my investing, I got into EOS, and that was just on the idea that I thought some of the batteries and ideas were interesting, and that actually worked out well. But that was I would not do that these days. And I think EOS now has like a pretty high short interest, if I remember right. I haven't looked at it in a minute, but are they still on here? Pretty high up. Wow, Plug's really jumped up there. Sometimes it's nice just to peer through this list and see maybe it's not as high. Oh, okay, they are on here. 22%. Not that it's not nothing, but I thought it was higher. I thought it was like 30%, which is high. There's not many. I always think it's like crazy, like 47%. And I get it, especially with the trucking stuff. Some of these have been ugly. But then you see what happens to like Yellow when they went bankrupt, and then it pops back. Either way, just seeing where it was on there, because I remember the short interest for that one really kept growing. Spirit kind of bounced back. Where did it end up settling? Pretty much near the lows still. It recovered, but now it's right back down. Wow, look at it. That was that. Oh no, this is what is no. I want like daily. Okay. So it's kind of popped back up, but still, I mean, it made all-time new lows, and now it's back a little bit, but the volume's starting to get weaker as you're going up there. I know if you guys are true value investors, I know that it's kind of like whatever, but it's part of what RK would always say. You can't just go off one style investing. Like you limit your world if you do it that way, and it's just foolish. You learn so much more by being able to see it from multiple different investment styles, like perspectives. I just want to see who this one was again, because have I looked at them recently? I know it says 124, but it doesn't tell me. Wow, that's an ugly chart. But they are generating cash flow. That's something like catching my eyes. Price to sales is pretty good. I mean, look at this. I mean, $948 million in revenues, and a market cap of 76. Like those are kind of things sometimes that will like pique my interest when I'm screening. And who knows? Maybe it's just it's still not enough. But I'll pull them up. Let's see what else is going on here. Purple. I haven't looked at purple in a second. Still not really generating much in terms of earnings or even cash flows. So those are always tough. You know, if you can't generate cash flow, we'll pull them up just because I kind of want to just have a decent list of ones to go through. And you know, if we pull them up and there's not much going on, it's fine. It's not a big deal. We can just skip over them. But sometimes you never know. That's where you find like little news stories or. And there was, I mean, if you look at the 12-month for insiders, I mean, 27. That's value. Is that 27 million? It might be 27 million, which is, I mean, that's a substantial amount when your market cap's 87 million. Oh, by the way, I finally got to watch Dumb Money, and I don't know if you guys were actually there for GameStop, but it's funny. It's funny how you know, like the story slowly gets twisted from how it really happened. I thought the movie was okay. You know, being involved in it, it wasn't exactly how I remember it. And I can't remember the actor's name, who he played Roaring Kitty, but I always thought he sounded like unsure of himself, and like I was like, that's not how RK was pretty confident. I mean, you know, GameStop was pretty high conviction, and I just thought it was strange how they played on that. Like he was like just like this unconfident, like just taking a gamble. They said his net worth too in the movie's worth like $97,000. Based on my calculations between Deep Fucking Value and Roaring Kitty, if it was a 5% position, which is what his spreadsheet showed, and then he showed his price of it, which was $50,000, that means the guy had $800,000 in that account, and that was one of his portfolios, which is part of the reason that I was drawn in, because I was like, wait a second, this dude made a $50,000 gamble, which everyone's freaking out about, but I'm like, that was only 5% of his portfolio? I mean, if 50,000 is only 5% of your portfolio, obviously you have a large portfolio. So, and you know, he had been saying he'd been investing for 10 years or whatever it was, and I know he's a CFA, or at least he's passed, I think, level 1. I think it goes 1, 2, 3, 3 being the hardest, and you start at 1. It's not like backwards or anything, but I don't know. I was just surprised at like some of the things that were in the movie, and I'm like, you know, I wish they probably could have went into a little more detail and became a little more nuanced on that kind of thing. But overall, it was okay. It brought back some memories of the times, because that was pretty crazy when that was all going on, if you were involved. Micro Algo. See, and like this one, you know, it trades cheap to book, but there's no revenues, you know, no sales. It's just, and it's from 2018. Like, how long does it take? How many years does it take for a company to start to generate any revenues? Like, I always think that's crazy. Like, charge point. They need a little more. Origin. I feel like I just looked at them. I think that 1.6 is January 6th. Maybe I should put it where it lists the year, because it gets confusing. It must be, because I wouldn't have looked back here. This one caught my eye. Little bounce back though. I mean, actually, like, this is the thing. Some of these moves on some of these cheaper companies, it's like stuff bounces so quick. I don't know how many outstanding shares they have, so I don't know how easy it is to get in and out of these things. And obviously, you can always be wrong and go just as quickly down too. So that's why I usually need something more tangible if I'm going to go heavy into something. I need some kind of news story or catalyst. You know, and they, you know, there's like no insider buying or anything. So without a news story, you know, the interesting thing is obviously they trade really cheap, but this is because, you know, up until this point, they're not generating cash flow. And I know it says earnings here, but that probably just means they're taking debt on or diluting investors. So both are, you know, not what you want. This is the thing too. I know I've had a few people ask me about, can they just steal these spreadsheets from us? But if you don't know how to use them, I don't think like you're gonna get the benefit out of it that people just are hoping for. And by the way, Sarah, you ruined my diet. Now I'm having a beer too. So thank you for the cinnamon bun. All right, so let's see. I'll pull up as BNED. Yeah, I hope BNED works out. It seems like the upside is there for me on that one. Oh, what's going on with GLT? I haven't looked at them in a minute. I've been in GLT before. They kind of got really hurt from the Ukraine war. It's like paper, supplies, products, and all that kind of stuff. And ever since in a big market for them was Ukraine, so they've just been in the tank since all that's been going on. But wow, they are really trading at lows right now. I think I was in them on one of these pullbacks. It might have been this one, because sometimes I let the first one go through, and then if I see some kind of support, I'll come back in on this kind of a bottom in here. And I don't know how much of this move I actually captured. And then I don't think it went as high. I started pulling off somewhere in here. It might have been even on like a dip here. So if I got in like here and got out there, it obviously wasn't what I wanted. But the thesis, I'll tell you, that's like, this is one of the things that's nice when you're tracking this kind of stuff, because like that's a company that I can guarantee you, if you want a quick multi-bagger, like if they make it through, because and this is a long company, like this company's been around for forever. It just happens to be that like right now they're kind of screwed with the Ukraine war. If that war comes to an end, I could think of like 2 or 3 companies that will just skyrocket just because of that news, because they were big, and it's going to take time. I shouldn't say they'll skyrocket, because you're going to have to redo all their infrastructure and stuff there, because I'm sure it's just been destroyed. But there's a few companies that if that war ends, it's going to be really bullish for the stocks. Those companies would really benefit from that war ending. I wonder like how long will they ever let foreign investors invest in Russia again? Because who knows what will happen there. I'm sure as soon as that opens up. It might even be bullish for China too. I think that's, there's such like a discount now to all the Chinese companies, but it's just because the risk of like, if you were involved in Russia at the time and you owned anything there, it just went to zero. So, I mean, I don't know how you manage a possibility that your investment can immediately become zero. Like I said, I'm big with stop losses in terms of just because of the position sizes I take, but if I'm worried something could all of a sudden like overnight go down like 70%, like it's tough. If you can't do anything about it and it's all foreign and political risk. China Automotive. It's a holding company. So the holding company, I mean, holding companies are tough to value anyways, and then ones that have foreign risk involved too. I mean, the numbers here look great, and it's trading at a 20% from the 52-week low, which is kind of crazy. But talk about a volatile looking stock. Look at this, from $1, you almost got a 10 bagger there. Some poor schmo bought up here. But I mean, that's a serious gap up there. I'm not really, I mean, momentum trading's nice if I'm involved beforehand, but I'm never someone that's like hopping in during a momentum like spike. I think that's the whole point of like doing this style, is like you're in before everybody else. You're not trying to catch stuff after it's happened. And, by understanding the business well enough, and Quantum saying, "Is this keep going up?" I've looked at this a bunch of times. This was one I just can't get under, but it keeps going up. I don't know who's buying. Sleep Number. My friend was just saying he's gonna buy one of these beds. My in-laws have one of these beds. They love it. This is crazy. This was trading in 21 at $150. And after COVID, it was a 10 bagger from 15. I'm gonna pull them up just to look. We'll see. All right, so my daily movers are anything that moved over 10%. These are daily losers. So obviously, just looking at this, you can tell today was relatively a bullish day. I mean, not much stuff was really down. Well, I keep saying this stuff from Monday, but whatever, it doesn't matter. Ranger Dayne. It's a little big, you know, like this does all interest me, but to capture the upside I want in the kind of time that I'm trying to do in those time frames, it's tough with a company of that size. VNET. Take a peek at them. I just looked at this Hongli. I didn't see. I don't know what's going on there. Yeah, I'm not seeing too much. We'll go with, I guess, Fluid is the more interesting stock to me. I mean, we're up to 8 companies now that we can take a look at, so that's good. Because the Insider's been boring lately. I haven't been able to just who's buying. I mean, Tilly's is the one that you know, I tend to if I'm gonna get in and out of something, and Tilly's would be the one that interests me. But they do keep buying though. I mean this is no joke. The amount of insider buying for them. Here, I'll start closing some of these just so I don't want this to start to lag. Just look at a 1-day chart, 1-day yearly. Yeah, I say this every time I look at Tilly's. I just don't see the upside. I don't see, you know, it just doesn't, it's not volatile enough. You know, I know most people are trying to avoid beta, but you kind of need it. Talos Energy. What is this purchase? All right, well, this is interesting. That is a huge purchase. This is small. That's the only. I like this one, Rave, but it's small and I don't know what Rave owns. What restaurants is Rave? Pie 5 and Pizza Inn restaurants. Where are those from? Does anyone know where those are from? If anyone's watching. Also, like the Pizza Inn Express. I like the names. Go to Pizza Inn. That sounds sick. Sounds operating. So just pizza places. It's tough up here in New York. It's tough to compete with pizza. There's a lot of good pizza places. PBF also had a pretty big purchase. Are those from today or yesterday? Because those are some substantial moves. Allied Gaming and Entertainment. I haven't looked at them. Are they? Is that casinos? Or is this one that I think Johnny just looked at this one. when he was doing his stream, I got my daughter, and it's tough to focus when she's running around. I'm trying to hang out with her, so I had it on the background. I was just kind of catching bits and pieces of what he was saying. I'm not really going to look at financials. Well, this looks well run. It's a great 2-year chart. This is moving enough. Sorry, I don't know why I always click on that one. We'll pull them up. Just, I mean, that's some serious insider buying. You know, if you got, you know, this is oil and gas. I got to go through exactly what they are, but that's some big purchasing going on there, and that's an immediate red flag on check. You know, look at me. All right, what is that? 10 companies already? Oh my god! Past few times I went to look at stuff, it's like nothing. But if there's that many on here, that's a pretty good list. I'm curious to look and see what Grand Tierra did. If I don't know if energy is moving. I didn't see that on the dashboard. Was that moving on the dashboard? No movements. Like nothing. Strange. I mean, you know, overall slightly bullish, but natural gas wasn't moving much either. All right. All right, so we'll enable this, and then all right, we'll update this. Will pull in all the information for all these tickers. So it'll take a second, but if we do it this way, then it pulls them all in real quick, and we can kind of get caught up on things. In the meantime, just want to look at GT's chart, because it looks like we're in an interesting spot on this one. I still can't believe this trades where it does. I know there's Colombian risk. It's mostly Colombian. There's some Ecuadorian risk, but I think this was the example. For instance, you know, if you're looking at one that compares to oil, do I have oil up still? Let's see if it actually. I was gonna say I wasn't sure if it would load with. Let's do a 5-year chart. I think I might have done this last time. Sorry if I'm like repeating myself, but yeah, I feel like you can find it and you can see that, you know, Grand Tierra is obviously more volatile than the actual just crude. But this looks cheap even on fundamentals at that price. So it'll take a sec for all these, like I said, to load up, because there's a lot that it's pulling in. But that's fine. All right. All right, so Rumble is up and running. All right, so Rumble's considered safe. Doesn't have much time. Immediately, you notice this dilution here. I mean, we went from 38 million to 280 to 386 million. It's obviously concerning. Margins are low. They're sitting on cash, but like that is their book value basically. Never generated any kind of earnings yet. So that's why I said, like, obviously, you know, when you're just looking at the fundamentals here, there's not much to go on. So this is why, you know, immediately you saw me check the news on it, because that's really what my question is what's going on. What's going on with the news? Oh, of course it's going to pull on up. Rumble. Is this all like Republican news? Is that what Rumble is, or is that just what's on here when it's featured? Is it all like news stuff? Is that mostly what this is? I feel like I vaguely remember that. See what everyone's talking about it. Oof, that is a big jump though. And I mean, not that post market means much, but I mean, it's a 40% jump almost in a day. And Barstool deal. What was the Barstool deal? Extended gains after announcing a partnership with Barstool Sports. Users of conservative YouTube alternative will get access. It is conservative. Access to all Barstool Sports content on the platform, including live streams, and a better platform will market and promote Rumble as their preferred video home. Portnoy, that guy's everywhere. Rumble is also the deal with former President Trump's social media, the TWOU, which has taken the former president's social media platform public, rose 50%. Yeah, I mean, you know, we don't need to get political here, but my thing is regardless, even with this, like, even if Trump gets voted in, let's say, like, is there going to be enough revenue generated from this? Like, is there going to be enough people using these platforms to justify an investment? I would think not. I mean, I actually agree with this. You know, there's so many websites now that are starting to become edited, you know, and it's been going on for a few years. And you know, I know not everyone like believes that to the same extent and you know, what they're editing and not. But, you know, the algorithms obviously are pushing certain content your way. Everyone's used to dealing with that. So, you know, I use DuckDuckGo, and it's not because I'm worried about, you know, what's being sent to me necessarily being edited. It's just that I would rather kind of be open to whatever. When I type something in, I want to see like the top post. I don't want it to be curved in any way. I'm usually just trying to find a quick answer, you know. I don't think I'm looking up anything shady. So, you know, when I'm asking, I'm like just trying to find a question. And sometimes Google just like annoys me with the way it does it. And, you know, I mean, Google's like one of those things that, like, yeah, for the longest time, I feel like they've been, you know, obviously like just the go-to, but I don't know. We'll see if it changes. I'm using Chrome. So, although I heard a lot of people complaining that Chrome is doing something if you have like an ad skipper or ad blocker. It's like, you know, running hard on your computer. Not that I have to worry about with this computer, just because it's pretty beastly. So like with this one, you know, the concern here is bankruptcy, obviously, if it's not much generating, because it's going to burn cash. And it doesn't have any debt. It's got a lot of cash on it. So even if it's not generating much from operations, which, you know, it's looking ugly here. What is it? 88 lost 88 million. I mean, they can stomach that for a few years technically. And that's assuming that they don't generate revenue. I'd have to look into the actual contract with Portnoy to see if what that's going to bring. I mean, sure, it'll bring eyes to the platform, but I mean, they got a long ways to go before they become profitable. So you can kind of think what you want, but this one I would require a pretty strict margin of safety, just because there's nothing that's going to, you know, really generate cash. I get it. There's narrative catalysts, but that's such a small part of it. Well, it all depends, but how do I forget the ticker wrong? So I'll just update it here. So like in here, you can see I label everything by with the year as well, so I can tell when I last looked at it. But what do you call it? Just checking something. What was that? $1? Where am I at? $1.49. Sorry, and let me know in the comments, guys, if it's tough to see any of this stuff. Just let me know, because I can always try zooming in a little. Like this one, I can definitely zoom in on. Some of it gets tough because it's just small. But so I'm saying this would be interested around $1. I'll say good news for now. Definitely needs more. Has no earnings yet. So that's a problem. It's definitely too expensive now. I'm just gonna put the deal with Barstool in here just so I kind of remember that. You know, I'm essentially no debt is what that means. So I'm gonna put that in there because it's important to know, because you know, if you are making risky moves and there's debt involved, that just totally alters the calculation for me. So, but it's all good. Oh, sorry guys, I gotta zoom in on some of these. I go back and forth between my laptop and my desktop, so sometimes as I'm going through here, stuff's gonna be zoomed in when it shouldn't be. Oh, and actually, you know, from last week, the other one I wanted to pull up is Flex Shopper. I've looked at them before. I just didn't get a chance to go through this ticker and just to kind of fresh up on what's going on. So if you guys don't know, it's a financial technology company which provides payment options to consumers. The company provides a variety of funding options via lease purchase solutions and loans, has several channels with which it generates payment options for customers. The company enables consumer utilizing its e-commerce marketplace to shop for brand names, electronics, home furnishing, other durable goods for lease-to-own basis. Its lease-to-own engine is the basis for its primary sales channels, which include business-to-customer and business-to-business channels. Offers a range of brands such as Samsung, Frigidaire, Hewlett-Packard, LG, Whirlpool, Ashley, Apple, so, you know, all kinds of stuff. Now, this one's been kind of in the gutter here for a while. Revenues are starting to drop back off. Cash is getting tight. Debt's getting high. Book values kind of stayed stagnant. They're writing stuff off now. What's CapEx going on here? It's up to 6. It looks like they sold something. Some kind of asset. I'm not really sure what they sold there. They did have positive earnings. Share count's kind of held steady for the past few years, which is good. And then what's their debt at? The debt keeps creeping up, so that's the problem, is when they have earnings like that, how much is that? You know, I always say I can look it up from the SEC report, but it doesn't bode well if you know, your cash flow from operations here. Last year was a really ugly year, it looks like. So and it looks like margins are kind of staying steady, which they need it to improve. I mean, you know, cash flow from operations, first few years of the business was about all I had. Yeah, it's probably just too pricey no matter what for me at this level. Let's see if there's anything new. I did see there's some insider. Yeah. Oh, it's from 22, so not much is talking about this. Just closed a purchase of over 8K in shares, but that's like nothing. These are just small purchases for insiders. Howard Dvorkin. Owns a lot of them. So, okay, he owns 4 million shares, and I mean that's a lot of shares for a $22 million share or 22 million share count. Market cap's small, and I know some of these companies are small. People might not even look at some of these just because of that, but I try not to let that limit. So I just want to see. I know this is old now, but sometimes I just like to see what people were thinking. You know, and obviously this is riskier as we get into like a subprime market with just in general high interest rates. Yeah, this and what Jobs is saying is I think this is more similar to RK's model, is that he's basing it on that if it fails you get zero. He's looking at this as options. My problem with options though is what kind of catalyst do you have to guarantee a time frame? If you're going to purchase options, you have to have something in a time frame. I mean, you can just buy options far out, but then you pay, and if you're just, I don't know, I don't think that's a great strategy, because if you're wrong, which it's so easy to be wrong, especially if you're adding time into the equation. It's one thing to call something right, but to be right, I mean, it is volatile even now. It's kind of crazy, the spikes that you see here, but it gets all the way down to 70 cents. I think that's what my calculation says that it should be. No, actually mine's saying 50 cents right now, so mine's starting to attack it. My valuation, just because of this average of loss of cash flow is gonna kill a business. It's gonna, if you're not generating cash from operations, I mean, you're gonna die. It's just a matter of time. Either, I mean, while you're dying, you're gonna hurt shareholders. I mean, you can get in and catch bounces, but and there is always catalysts. That's why that's really what cigar investing is. But not obviously seeing anything that really is catching my eye there. Just trying to get somewhere in there. It's fine. I had high debt for them. Did we just talk about their debt? Oh, they do have really high debt, 108. But that's not actual debt, right? That's just the lease to own. That's the stuff that they've given out. Because that's like kind of like how Cons was, but Cons on their structure was they created VIE structures, and that kind of took the risk off of just on them. To talk about the actual So this is like they're in a credit agreement. This is the covenants of it. they got 10 million due in 25. I don't know. They didn't have any cash on hand, right? Or not much. 5 million. Honestly, I'll probably have to go and dive through. Oh, they have preferred stock too. Do they really have preferred? I probably should have noticed that. Yeah, they do. Yeah, I don't know if honestly, I don't think I'm gonna go through the trouble. That actually drives keeps that valuation is gonna actually be maybe a little lower with preferred. Nah, I'm good. That's more risk than I need to take on. Alright, so next is VNET. It's a carrier-neutral internet data service provider. The company hosts its customer servers, networking equipment, and provides interconnectivity. The company also provides managed network services to enable customers to deliver data across the internet through its data transmission network and smart routing technology. The company provides value-added services such as content delivery, network services, virtual private network services, and last-mile wide broadband services. Has clouds, so blah, blah, blah. So like most of these kind of companies, it's pretty levered. Has that transitioned to anything? So have 2 million in debt, 795 in short term, which I have to figure exactly what that is, but they only have 400 in cash, which makes me think that there's going to be some dilution going on here. Share counts popped up quite a bit. We're at almost 3 times what they started with. Debt's at an all-time high. They've definitely been in a better cash position, although this was probably from the equity raise. And I mean, if you look at earnings here, it's just not coming together. I mean, look how much gets eaten between EBITDA and EBIT. They do generate cash flow, so that's bullish. But then you look at their simple free cash flow, which is just the CapEx eating into it, and it's all negative. I mean, it's always negative. So the current structure just kind of gets eaten, which is probably why you're going to watch this book value keep declining here. And this is saying it's pretty levered too. So mine's telling me to issue, another 400 million shares. And I mean, this you can see. I mean, this is why there's this. like when was this worth this much money? Was it ever worth that much money? $40. And now we're down to 2, sub 2. Oh my god, I can never figure out which one to click on here. No dividend. Yeah, I mean, the value pendulum. We'll see if he's got any good points. they have to repurchase its 600 million convertible bonds. So yeah, I don't know. I don't think there's anything in there. You know, that's not too recent. I just want to see what's actually going on with that. This is from 4/26 of last year. This is a really strange way of writing this. All my stuff, by the way, converts in my spreadsheets, converts everything to US dollars. So no matter how they file, I just convert it over. This is such a pain the way this is like listed out. So leases, long-term borrowings. Let's see here. It's gonna be tough to compare these numbers to my numbers though, because these are in oh, here's US dollars. Okay. It's a lot of debt. $2 billion in debt. Honestly, I don't think there's much to add here. I don't think my valuation really changed all that much from last time. It's actually higher right now, but like I said, a big part is that their capex is just so expensive. It's down a little bit, but it's still, I mean, you know, just from the past 2 years, but it's still super high. They're having such a hard time generating any kind of earnings just yet. I think that's going to continue to dilute. Let's go to the chart here and see. Oh yeah, this is the one that's way down. And sometimes I'll check this just because it's good to know. But like, what did mine say? It's valuing at about $2.60. So at 260, I mean, you can see there's obviously support there. But now that we've crushed through that, what is this? I don't need no antivirus right now. Go away. This is at $1.90. Come back. 260. $2 is the low. 185 it got down to. Yeah, I don't think that's all that crazy, but and when I say that, I mean I the price that it's dropped down below this, I don't think it's all that crazy because people are starting to factor in that there's other issues going on here. So this is the thing too. So like I'll put, based just on 260, like $1.73 would be where I start to get interested in this. But I think book value is going to continue to go down. That's what I would look forward to, or not forward to, but that's what I would look for on their next filing, which, like I said, was a April 26th of last year. So we still got almost 2 full months, just over that, before we'll know anything more. All right. I mean, I could go through the transcript, but at this point, if this starts to get down below, if it continues to drop, I'll probably pull this one up and start to go through the transcripts and start really reading through the 20F just to see if I can understand the business well enough to see if it's, because that's kind of how I choose how far to delve into things. I kind of do this quick base analysis on things, especially if I haven't looked at it in a while or I don't look at it, But if it's not cheap enough already, just based on the fundamentals, usually I kind of push it off a little bit, and then as it starts to creep down, then I'll start to dig in a little bit more, and if I find a story there, then I'll dig in. Then I'll go deeper. But I don't think there's too much going on there. Sorry, I gotta just zoom out here. So this was TALO's. TALO's had this insider buy. That's immediately piquing my interest here. I figured it was something strange like this going on. Close out all these stinking tabs. It's amazing how many tabs you open up while you're doing all this. Just because I'm interested, I just want to see the chart here as well, just to see where they were buying. Buying on definite lows. Man, look at that. That's some volume right there. But does nothing to stock price, which is why I'm like something strange about it. So either way, it's technically driven independent exploration and production company, has operations in the United States and offshore Mexico, both through upstream oil, gas, and exploration and production and the development of carbon capture and sequestration opportunities. The company operates through the exploration and production of oil, natural gas, and GL. And then it's just saying where it is basically in the different areas. Just from a valuation perspective, it doesn't look super expensive by any means. It looks, like it's just shy of where I would consider fair value. Obviously, like I said before, these are going to be cyclical. This is going to definitely be cyclical with natural gas and oil itself. So trying to follow those two commodities is pretty important. Had a great year last year. A lot of shares now, a lot of debt. What is going on? Why are you taking on all those shares in debt? What is the cash that you need here? What is their cash now? 100? You added 300 million in debt here. You added 50% to your share count. Huh. So what did it say about this insider? Additional representative persons. See Exhibit 99.1. They've been in PBF. Wasn't that the other one I pulled up? These guys are just going on buying sprees, because PBF was the other one I was looking at, wasn't it? So, what in the world are these guys seeing? So where is this? I just want to see exactly where it's headquartered. I know it says the United States, but Houston. Okay, Houston makes sense. And then PBF is 7. Sorry, I'll just keep zooming out on these. I'm sorry. I usually try and go in, but like I said, I got laid up to get the stream even going. I didn't want to be take any longer, so it's like, I'll just update it. Oh, these guys aren't that far from me. Jazzy. Well, this looks a hell of a lot nicer. It's not often I get to pull up a company that looks that green. Not that this one's like bad by any means. But what is the debt going on here? Why all the debt? This is from November 7th. 11/11. So cash of 13 million. Strange that they separate property and equipment like that, but either way. Long-term debt is $1 billion. That's a lot. Current portion's 33. Operating leases aren't bad. Doesn't really affect much. Net income is down in comparison to the 9 months from last year. So it looks like they're using a lot of cash though for their actual development part. So I mean, you can kind of expect that. You know, CapEx is pretty high, 500 million on a company that makes 888 million. So this is the thing, you know, and this is why sometimes you got to be careful with valuation on these things, especially like a cyclical company that has a commodity like this, because if they're spending that on CapEx, obviously you're expecting that's going to be future returns. So that's why a lot of times I don't, depends on what it is, but I don't always look at the free cash flow. A lot of times I try to look at cash flow from operations. Not that free cash flow doesn't matter. It does matter. But if it's generating cash flow from operations and the idea is in the future, they're spending a lot on CapEx right now, so free cash flow might look a little rough. It's okay with me as long as there's a return, and whether I want to go off historicals or, to be honest, you know, I rely on other people in the industries that know the supply and demand of these things better than I ever do or ever will. So I just don't care about it quite like that. Not saying I don't care about what it means. It's just I don't have the time to delve in like these guys do. Some of these guys, that's like their job. TALO's Sunsphere Discovery CO2 could push the price up. TALO's Energy Report's proposed offering of 1 billion second priority senior secured notes. So an aggregate of 340 million principal amount of the new notes will be subject to a special mandatory redemption in the event that transactions contemplated by the definitive agreement to acquire Quarter North are not consummated on or before May 31st of 2024, or up to September 30th, solely in the event that the parties require additional time to satisfy certain requirements, or if the company notifies the trustees of the new notes that will not pursue the consummation of the acquisition. That's a big acquisition. It's a lot of notes on to take someone up. You'll notice a lot of these oil and gas companies kind of eat each other up. So not necessarily surprising in the field. And then when I go back to here, $230 million. I just want to see what kind of ownership's going on with this thing. Bain Capital. Board of directors isn't all that impressive, I can tell you that. Alright, well either way, I mean it's good to know that there's a that time I clicked, I know I clicked on the right one, it still didn't pull up the right one. Did I pull up Seeking? I did, but I wasn't reading the actual things, right? I was reading. Raising a lot of money here. So that's the other thing too. I got to figure out what the share count would be if they priced upside stock offering. And then also too, if they take on that much, or if they add that much debt to their balance sheet. Yeah, if they're going to get $1 billion. They're just reading about how they're saying that bankers are trusting him, obviously. So he's just doing his discounted cash rate here. He's got an internal rate of just in the teen, like in the double digits. So he's just saying that they, with recent Sunspur discovery and oil production expected from Venice and Live Rock, Talos Energy could see an acceleration of oil production in 2024 and future years. So, I mean, whatever. That doesn't... Yeah, they're just, I mean, they're trying to get as much cash as they can. They're trying to grow. How successful that will be, what that's going to do to shareholders, that's the big question with this one. Let's see here. I don't think my actual calculation changed much. So that's 16. insider buy, but it doesn't really change much. I just want to look at their chart one more time. I mean, it's kind of trading with oil, but I don't think this is the play I would make if I was going to. I mean, PBF. What was PBF doing? That was possibly more interesting. Was that 7? Yeah. But PBF's big. I mean, they're 5 billion, so I'm not quite sure how that'll all work out. Well, this is definitely off. So I don't have 20 years of data right now, so anytime I see that the whole spreadsheet's actually filled in, I know it's an error. Because as of now, what do they file? They file yearly, quarterly? Yes, quarterly. So I just have it because sometimes if it's foreign companies and they the way they do their filing, it's either just biannually or annually, and it messes up the way my data gets pulled in. So I just can adjust it quickly. Holy leverage. A lot of debt going on here. Not impressive earnings at all. Margins have gotten ugly. They got spending on their people down to 55%. Like, look at, like, 80%. How do you run a business if 80% goes to SG&A? They don't have a lot of cash on hand. Yeah, I'm not really seeing too much going on here. Where are these guys located out of? DC area. Not generating really much cash flow. Got a lot of intangibles and a lot of debt. Yeah. I'll just check to see if anyone has said anything good about it, because if not, and like these moves, like some of these things are going to bounce up and down, which I know is kind of the stocks I'm looking for. Obviously, I'm looking things with high beta, but at the same time, there has to be a reason we're going to bounce to the upside. I'm just go on, oh, well, in the past, it's bounced up and down. So, I mean, some people I know do it, but yeah, I don't think there's much to even talk about here. I mean, he's talking possibly. He's saying I wouldn't short. I would sell it, but I wouldn't short it just yet. It's a heavily distressed company, needs major debt restructuring in the next 2 years. That's due in 2025. Yeah, this one doesn't look great. This is pretty rough. Share count's just trickling up. I mean, book value's been starting to get eaten alive too. What was that? TWOU. Probably gotta just scroll down, but oh well. Wow, I haven't looked at this in a year. What was the chart? What was the chart back then? It's a good game to play. Let's see where it was trading. I said to get in at 230 back then. Obviously, I mean, and that number doesn't really matter because I wouldn't have gotten in there because I would have adjusted if I looked at it again during when it had gotten down to here. But yeah, so it's continuing to kind of crater down. It makes me worry about bankruptcy for sure. Throw the BR in there, my version of bankruptcy, possibly. And not that it's going to go bankrupt, it's just a warning. And what did that guy actually, now that I say that, debt due 2025 is what he was saying. I just want to double check that before I just take someone's word for it. Sure, you're probably right. Does it tell you the when it's all come out? Yeah, starts at 25 and only gets uglier from there. Wow. And they really don't have a lot of cash on hands too. That's rough. 41 mil is not going to do it, especially when you're spending like that. Go from 167 to 41. All right. Well, I think that's where I'm going to call it, guys. I'd like to keep going. Obviously, I still got 5 or 6 more tickers to get through, but gotta get some sleep. So I'll take a look at stuff tomorrow. Sorry I didn't get to move to. I didn't really get a chance to go over the on deck stuff or even the watch list, which maybe if we can get through these ones. Johnny's gonna be hosting or streaming on Thursday, his normal time, and then Saturday we'll be doing another stream, and that's the one where we're both streaming together. And we'll go over kind of the movers from the week. Adherent has still continued to do well. I continue to trim on that way up. Advanced emissions. Oh my gosh, I shouldn't have trimmed as quick as I did because that one's. I'm down to basically like a minimal amount of shares in that one now, but it looks great. And then right now the stock for us is BNED, so we'll keep following that. We'll probably go over Grand Tierra again because at these levels it definitely is interesting. It's just trying to figure out what's going on with oil. It's tough. It's tough to know anything like that, and obviously also the political risk that I talked about before. But we'll figure it out, or we won't. And if we don't, then I'll probably personally pass on it. But I still think it's interesting at those prices. All right, guys. Well, I'm out of beer, so that pretty much does it, anyways. Everybody, hope you have a good night. If you tuned in, thanks for stopping in. Don't forget to leave a comment. If you have any questions about anything, like I said, we're always happy to go over stuff and kind of how we're viewing things. I was going to, at some point, just because I think it's important, especially as the stream is starting to grow, that we, just to legitimize the stream, that we kind of post like our returns. I wanted to just kind of wait until the month was over because I use Fidelity and it updates it at the end of the month. So then that way I can kind of clearly show you up till that point what my returns have been in this portfolio. And as I've said a number of times before, I have multiple portfolios. So this is just one of them. But obviously this is the one that I'm taking the higher risk kind of strategy on, taking really deep, more, it's strictly more deep value. And turnarounds, distressed companies, that kind of thing. So I'll post the returns. Like I said, I've been doing this for just about 3 years, just over 3 years, I should say. So that way you can kind of see what the actual returns have been, to give you an idea of how successful so far this has been. Obviously, it's only 3 years of data, so it's limited in what that means. But I think like we've had some good and bad years in the past 3 years, with COVID and everything going on. Like there was big pops and stuff was down, and trying to navigate that in shorter time periods to continue really high returns, I think is obviously the difficult part. I don't think it can't be done. I wouldn't be doing this if I didn't think you couldn't get it done. But at some point, what I'll do is I just want to post it. Either I'll show it on here, or I'll post it like on like the Twitter account. Just because I think it's important to just show that like we are legit doing this. We are really investing real money. There is definite risk to all this, and with that being said, though, there is a strategy to this. There is constant reflection on what we're doing, and setting real stops in place, and trying to turn this into a success. So, like I said, at the end of the month, I will post that. Hopefully, the rest of the month keeps going kind of the way it is. It's been a good month so far, but who knows? It's always tough to see where things are going to go into the future. And overall, I feel like so far it's should I dare say it's been a pretty bullish start to the year. I mean, it was like a little rough at the start, and I think things kind of bounced right back. So I think stuff's starting to break new highs today. I think I saw the Dow had broke high. So, or touched 38,000. I don't think it ever has, or it's been a while. I could look. Yeah, I mean, look at this. It's crazy. So, things look good. I mean, right now. So, we'll see. Obviously the big question next is inflation data, which should be coming out soon. I'm actually not sure when inflation data comes out. Is that... I saw Netflix was up big. Netflix had a big beat. That's one of the great companies, like Netflix. Like when that was cheap, like, oh man, you should have been able to notice that. But either way, all right, guys. Well, hope everybody has a good night. I'll see everybody next time. Johnny, like I said, Johnny will be on Thursday. Everyone have a good one.